What's up, guys? I appreciate you joining me today. Now, the trade I'm about to discuss happened right at the opening bell. Fair warning though, if you are just starting or getting started in trading, this might not be the best strategy for you. You see, the markets can be quite erratic when they open. They are volatile and unpredictable, and without enough experience, you are likely to face losses. So tread carefully. And now, as I was looking at the 5 minute time frame here, a potential trading setup began to emerge, something that I thought could work in my favor. So after examining this whole price action, I could see the clear formation of a double bottom, confirming the range's lower limit. Beyond just marking the end of this short-term correction phase, this pattern played a key role in triggering this upward price surge, clearly setting it on a course towards the range's upper limit. So starting from this bottom down here, this entire rebalancing move created, in my view, a coherent picture of the market's short-term trajectory. Now, my decision to identify an area of interest and initiate a short position at this level was influenced by several factors. The first one being the price crossing below the 9 exponential moving average or EMA. This is, relatively speaking, a significant move in technical analysis that often signals a potential shorting opportunity. And here is how it works. Obviously, this goes to you newbies out there. When the price dips below the 9 EMA, it's like a bell ringing, alerting you to a possible chance to short. On the flip side, if the price jumps above the EMA, it could be an invitation to buy. However, it's important to keep in mind that the 9 EMA, which emphasizes the most recent 9 periods of price data, whether they are minutes, hours, days, or weeks, can often lag behind. Therefore, while it is helpful in terms of it being an unhelpful technical tool, it shouldn't be your only guide. Always pair this signal with other indicators to make sure you are making the most informed entry. This way, you won't be left holding the bag. And the argument behind this logic, it has to do with the fact that in trading, you have to develop the skill to absorb information, break it down into smaller bits, and then really analyze it. From there, you take that info and use what really works for you and your strategy while brushing off the stuff that doesn't really matter. Streamlining the clutter on your charts is, in my view, key when it comes to spotting high probability trades. Returning to the chart, the breach of the EMA was subsequently followed by this long upper wick that indicated a rejection to the upside as the market was looking to kind of reclaim the 70s again to the north side here. What that means is that buyers tried to push the price up, but shorts resisted and were able to bring the price down again. This could be a sign of a possible bearish reversal if it appears after a long bullish trend. Now, it's important to note here that the increase in price should not be mistaken for a significant and sustained trend. Rather, this week was the result of a move driven by the pursuit of smart money for some extra liquidity. Additionally, another element in this confluence of factors was that I strategically positioned my short at the 36 support level with anticipation that if broken, it would accelerate the downward momentum of the price. In other words, I was hoping for the market to puke lower if it broke below this level. And as indicated by the chart, once the price broke support, it nosedived, hitting my profit target that aligns with the balancing of this recent imbalance zone. Okay, having wrapped up this trade, let's shift our focus and explore the specifics of my second entry. And now, after looking at this 5-minute NQ time frame and evaluating the price trend, it seems like the short-term decline is almost done, thanks to this bounce off of the 803 level. In my opinion, this reversal pretty much confirmed that we had hit the bottom of this range. Also, another reversal argument is that if you take a look at these rejection wicks, especially these long lower wicks down here, they clearly broke through this 15-minute imbalance area. So in my opinion, this move confirmed the market shift, since we know that the price strongly reacts when the balance between supply and demand is at its highest. In other words, the bigger the difference between buyers and sellers at a particular price level, the more powerful the price reversal will be. So I thought here, hey, maybe this confluence of factors could support a nice surge in price towards the range high. This idea was further reinforced by the price breaking structure or formation, as I always say, is the same concept, above the 820s after a 30-point run. However, it's super important to keep in mind that after every price extension, patience is key. You got to wait for a correction before considering making a trade. So I wouldn't be on the lookout here for an entry point unless the price gives me enough proof, like this imbalance zone over here, that tells me that there is a valid argument to be made in favor of taking the trade, as long as the market holds the 15 level. That's why I based my entry within this imbalance zone. And now, after getting my long filled, the market starts to range and then makes a couple marginal highs before surging north and narrowly missing my profit target. I then proceeded to readjust both my stop loss and profit target accordingly. This would have been a 30-point gainer had my initial target been hit. However, I can't complain, as I still managed to get some really good points from this trade. I think that this entry can be seen as an example of finding that delicate blend or harmony between thinking ahead without getting ahead of ourselves. In my view, trading is about planning for different scenarios without actually being overly presumptive about the outcome. This obviously involves setting realistic profit targets, adjusting stop loss levels as needed, and being prepared to acknowledge that the market is basically an unpredictable beast. This balance, in my opinion, when achieved, can lead to profitable trades. And for those of you keen on delving further into similar trading action, I recommend watching the following video. Right, gang, that should do it for today. Thanks again for watching, and as always, I hope to see you all in the next video.